Welcome back. The UAE's financial markets are closed today. Trading will resume on Sunday. So let's now take a look at the various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. And in international business news, European leaders have given themselves until June to finalise an increase in their temporary bailout facility after they had previously said they would deliver a comprehensive package to tackle the Eurozone debt crisis by the end of March. European leaders at a summit in Brussels agreed to give themselves more time to finalise an increase in their temporary bailout facility, and concerns surrounding Portugal dominated the meeting. The country, already in fiscal difficulty, saw a shock exit of its prime minister after austerity measures aimed at avoiding a bailout were thrown out by the country's parliament. The euro itself was little moved. Merkel says it survived a critical test throughout this crisis, but added there is a lot of work to be done by member states.
We have agreed to ensure that the temporary facility has an effective lending capacity of €440 billion. It will be in place in June.
Wall Street advanced for a third straight day on Friday, giving the S&P its best weekly performance since early February, but volumes remained light. The three major stock indexes posted weekly gains after 2 straight weeks of declines, brought on by the Japanese earthquake and a resurfacing of European debt issues. Helped by a rise in tech shares after an upbeat outlook from Oracle Corp, the S&P notched its best week since early December. Friday's trading volume of 6.56 billion shares on the New York Stock Exchange, NYSE, Amex and Nasdaq was weak, with Friday's session at the second lowest of the year. For the week, the Dow gained 3.1%, the S&P climbed 2.7%, and the Nasdaq advanced 3.8%. Advancing stocks outnumbered declining ones on the NYSE by 1,969 to 1,015, while on the Nasdaq, advances beat decliners 1,515 to 1,092. India's Economic Affairs Secretary R. Gopalan has announced that the government is looking to raise over 60% of the total budgeted market borrowings for the next fiscal year in the first half of the current fiscal year, which will amount to 2.5 trillion rupees or $55 billion. Gopalan said that the government's dependence on market borrowing was coming down. Prospects of tax buoyancy on the back of robust economic growth have lowered the government's dependence on market borrowings for 2011 to 12. The Economic Affairs Secretary said lower government borrowings for the entire fiscal will have a positive impact for the private sector, as they will not crowd out the resources as much as they did in the current fiscal year, 2010 to 11.
If you look at it every year, we do the front loading in the first half, because in the second half, our experience is that the private sector gets into the market for the second booking, and state governments also access the market in the second half. And therefore, this is what we had in the first half. The government does its major, and it has been the consistent policy every year.
And after the break, we take a look at the day's sports news, so stay with us.